Hey, welcome. Have you ever had that heart-stopping moment? You know the one. You look at your own records for your bank account, then you look at the bank statement, and the numbers, they just don't match. It's a super common financial puzzle, and today we are going to solve it together. So let's just dive right into the main question. This right here is the heart of the entire mystery. You've been careful, you've tracked everything, but the bank seems to be telling a completely different story. So who's right? Well, the thing is, it's not really about one being right and the other being wrong. And that's what makes this so interesting. So let's officially open the case file on what I like to call the mismatched balances mystery. In one corner, you've got your records, what we often call a cash book. And in the other corner, you have the official bank statement. Two documents, one account, but somehow two different bottom lines. Okay, check this out. It's a classic situation. Your records say you have, let's say, $5,180, but the bank statement for that very same day says you've got $6,085. Now, this doesn't automatically mean someone made a mistake. It's almost always about one thing, timing. And our job is to figure out what happened in that time gap. And this is absolutely crucial to remember. We're not really hunting for an error here. A lot of the time, both balances are actually correct from their own point of view. The real goal is to understand the journey each transaction took, and then bring these two different perspectives together into one single clear financial story. All right, to solve any mystery, you have to identify the culprits, right? So let's meet the usual suspects. These are the most common reasons why your records and the banks just aren't seeing eye to eye, at least for now. Okay, so our first group of suspects are the transactions that you've already recorded, but they haven't actually cleared the banking system. You know about them, you've written them down, but as far as the bank is concerned, they don't exist yet. This really breaks down into two main types. First, you have unpresented checks. These are checks you've written to pay someone, but that person just hasn't gotten around to cashing it yet. Then on the flip side, you've got uncredited checks. These are deposits you've made, but the money is still floating around in the system and hasn't officially landed in your account. Now, our second category of suspects completely flips the script. These are things the bank has already processed, but you haven't found out about them yet. So in this case, the bank knows something that you don't. So what kind of stuff are we talking about? Well, it could be things like bank service charges, or automatic payments you've set up, like standing orders and direct debits. But hey, it can also be good news. Maybe you received a direct credit, like a dividend payment, that you only find out about when you look at your statement. Okay, so we've got our suspects all lined up. Now it's time to bring in our first tool. The first thing you always want to do is get your own house in order. We need to adjust our records based on all this new info we just got from the bank. This whole process is called creating an adjusted cash book. All you're doing is taking those clues that you didn't have before, like those bank charges and direct credits, and you're putting them into your own records. It's basically about playing catch up with what the bank already knows. And the process itself is really logical. You just start with the balance you originally had. Then you add any money that came in that you didn't know about, like those direct credits. After that, you subtract any payments that went out that you missed, like fees or automatic debits. What you're left with is your new and much more accurate adjusted balance. And this number right here, this is the one that really matters. The adjusted cash book balance is the most accurate picture of the cash you actually have available. This is the number you should be using for all your financial planning. All right, now it's time for the main event. We've updated our own records. Now it's time for the final step, proving that our new adjusted number and the bank's number are actually telling the exact same story. This is the great reconciliation. This is where it all comes together. We start with our super accurate adjusted balance. Then we deal with those timing differences. We add back the value of any unpresented checks. Why? Because the bank doesn't know you've spent that money yet, so it's still in their version of your account. Then, we subtract any deposits that haven't cleared because that money hasn't officially arrived at the bank. And that final number should perfectly exactly match the balance on your bank statement. And just like that, boom, the mystery is solved. We've accounted for every single difference and proved that both sets of records were correct all along. It's a pretty satisfying moment, not gonna lie. So really, you should think of it like this. Reconciliation isn't about finding a winner and a loser. It's just the proof that your records and the bank's records, even though they looked different for a moment, were both just telling different parts of the same financial story. Of course, we're living in a totally different world now, right? A world of instant transfers, real-time alerts. So how does this old school accounting process really hold up in the super fast world of modern fintech? Oh, technology has for sure changed the game. I mean, with online banking, mobile wallets, and instant payments, those timing differences we were talking about have shrunk dramatically. The gap between when you know about a transaction and when the bank knows about it is getting smaller and smaller every day. But, and this is a really big but, the principle behind it all is still so important. It doesn't matter if it's done automatically by some fancy software or by you with a pen and paper. The act of confirming that your records match the bank's is still a fundamental check for your financial health. It helps you catch errors or even sometimes fraud. So that kind of leaves us with one last question to chew on. As we move into a future where every single transaction might be truly instant, will we even need a formal reconciliation process anymore? Or will that core idea of verifying our finances always be a cornerstone of managing our money well? It's definitely something to think about. Thanks so much for joining me on this explainer.